Hello and welcome to another daily Forex market review. My name is Schimming, and this review is for Tuesday, February the 12th. At the risk of sounding like a broken record, it once again was a day of the yen. The yen has continued to experience above average volatility, and the trading ranges on the major yen pairs are the best in the marketplace. Number 1, number 2, and number 3 being Euro yen, Pound yen, and Swiss yen in that order. Coming into the tail end of the Tokyo markets and leading into the London session, we did have the yen showing the most strength of the 8 major currencies. However, it leveled off as the London markets opened, and we saw it actually lose its momentum to the upside. As we approach the New York time frame, you can see this is the highest mark. It was rated at a 36 on my currency strength index and seemed to be tapering down. At the same time, the euro was experiencing some strength, and it did appear early on that the euro yen may be making another assault to the upside and wanting to produce some long opportunities. We in fact did take long trades on the trade room today. However, as it approached and got near that 127 mark, which in the past has been the lofty level, and only seeing those 2 breaks above 127, it looked like it was going to fail. And so we were changing course and considering the pair as a shorting opportunity from that point forward. Although I say that, and there was no way to anticipate this meteoric rise in the yen out of nowhere that created a downturn in the yen pairs that was very powerful, very swift, a lot of pips in a very short period of time. The euro yen and the pound yen specifically retraced by about 150, 160 pips in a matter of maybe 10 or 15 minutes. It was fast and it was furious. If you were long, it caught you out. Hopefully you had tight stops and you got stopped out. If you were short, you were very fortunate and got lucky and experienced just a major opportunity to the downside. If you were sitting on the sidelines, you were frustrated and wishing that you were in the trade. The beauty of the transitional aspect in the marketplace is there are opportunities both long and short. What it does when we see a pair in transition is just eliminates the swing trades, because it's never gaining enough momentum in one direction or the other to really bite on to a longer term trade situation. Even though some of us want to, we have to allow ourselves to take what the market is willing to give. And right now in transition, it's not giving much, but there's definitely a respectable amount of trading range in the euro yen and the pound yen and the Swiss yen. Euro yen is the only pair that has experienced over 250 pips per day average trading range over the last 5 and 10 days, and its 30-day number is over 200. It's the only pair in the marketplace that can say that, and that's 25% to 50% or to even to 100% or more greater average trading range than any of the other major pairs. This is where your opportunity lies, and this is why we have been focusing on the pair. You can also see the pound in pink trending down fairly consistently today, although we've gotten into the late afternoon stages and obviously the market is starting to go sideways, and you can see that here in the display. Now, if we look at our long-term view, just do a quick view of this view I've been showing you each day and just slightly updating it, reminding you of the trend line that goes back from, you can go back 6 months on this pair and see this upward momentum. You can go back 6 months on many of the yen pairs and see something very similar to this configuration. Big moves, consolidations, big moves, consolidations, a lot. However, clearly, and I noted it up here in the top right hand corner, instead of putting all the support and resistance lines on this page, I'm just boxing in the transitional period that we're experiencing. And we can look at that with greater detail. Remember, what was the trend line to the upside now is producing some resistance. What was support becomes resistance when we trade through it. What is resistance becomes support when we trade through it. As a matter of fact, for breakouts and breakdowns, that's exactly what you need to see. The proof that support was resistance or the proof that resistance was support. It's a key aspect to trading breakouts and breakdowns successfully and when done properly. can be one of the most high probable trades you can take, as opposed to the false breaks and the bad situations that most breakout and breakdown trades result in for traders who do not know how to approach them accurately and properly. Class I teach, be more than happy to share the information with you if you ask. So we have the trend line now producing some resistance. We have the pair consolidating a little bit tighter. Remember, this is a positive. The longer something consolidates, typically the bigger the move from that consolidation is. Now, all these reports came out today saying the U.S. was okay with yen weakness. The Bank of Japan was okay with yen weakness. Everybody's just copacetic with yen weakness. It almost seemed like a sucker bet, because as those reports are filtering into Reuters and Bloomberg and your various news sources, the yen, that's almost exactly when the yen made that meteoric rise. And I'm telling you, that was not individual traders forcing that type of movement into the pairs in that short period of time. No way, no how. So this is blowing up that little consolidation period. This is looking at the last high of that 1, 2, 3 pattern, or the double top that the pair experienced over here above 127 at the top right hand corner of the page. 127. I thought it was a little bit higher. 47 here at this high. The previous high that was part of the double, the first top of the double top, or 1, 2, 3 if you will, was 127.70. Those are the two moves over 127. And as we were trading today, this move is where we took long trades looking for it to make another assault. We see it got up into the upper 126 range. This move in here went to 126.63, and this move went all the way up to 126.91. Don't know if our 94, 95 range, so just under 127. I don't know if I said that previous one right, but 126.60s and 126.90s. Again, it appears that the 127 wanted to play the game and say, this is too much. Remember, in transition, the pair is experiencing both a collision of buyers and sellers. Two different opinions with money are coming into the pair. Neither one outpacing the other than just short periods of time where there's more buyers and sellers, more sellers than buyers, more buyers and sellers, more sellers than buyers. The key of this is this 430 plus retracement that came down from that 127.70 high. Clearly it found a base in the 123.50 range. That is a 430 plus pip reversal. That's about as much as we're going to get in this marketplace, where buyers are choosing to continue to jump into the yen pairs long. And you can also see with a little simple trend line, I'm just trying to point out the obvious divergence and base that was found. And let's just round it into the 123.50 range, where this thing violated 124. Looked like it could go a lot farther if it wanted to keep going. There's a lot of distance, but these pullbacks are being met with buyers. So what I've been suggesting when we were coming under the 126 and under the 124 is there a further downside. Now that we found buyers and see divergence, then yesterday in review I was suggesting, look, if we can go back over 126, we're going to try and test those highs. We're going to try and get back to the 127 range, if not higher. I look forward to the day it either breaks out or breaks down from this consolidation, and the transition is over. Obviously it's going to produce some above average results. So today it looked like it ran out of steam. Again, didn't see the yen's huge rise coming, but we were already turning our back on the long trades and wanting to shift our opinion short. Even the pound yen was the short that I took, and not the euro yen. But again, as I said shortly, just a minute ago, you can see a very similar configuration for most of the yen pairs. It just happens that the euro yen, because of its trading range and the overwhelming strength of the euro overall and the overwhelming weakness of the yen overall, is making the euro yen the most desirable pair of all of them in the group, in my opinion. That doesn't mean there's not other trades to be taken. Just using this as an example, I think the notes, the support and resistance ranges are pretty obvious and definitely very tradable. And the opportunity and the excitement that you should feel knowing that it cannot move sideways forever. It can't transition for the rest of its days. And at some point, it's either going to move out of this to the upside. We would trade it under breakout rules. And again, there's a very proper way to do that. Or it's going to break down. And there's a lot of downside potential. And we would trade it under breakdown rules. And again, there's a very set and proper way to approach that as well. So where are we now? We failed to get above the 127 range. We dipped below the 126 range. Best trade I've taken today was a short on euro yen, and but yet the 125 is now held up. There's a lot of support and resistance in here. What I've marked is 126, 125, 124. I have this low end marked. If we zipped it back, you'd see I've got that 127.70 marked. This thing has got itself locked inside a pretty decent range, but an obvious range of support and resistance and consolidation while it transitions. Where it goes, based on the support and resistance levels, should be your bias on whether you're trading this long or short. The confusing thing for many of you is the fact that there are both long and short trades available. I was long and short at various times in euro yen yesterday. I've been long and short in the euro yen today, and until it can get above the high end or below the low end, that type of trading opportunity and trading behavior must continue. So what's this mean? It means that the volatility is there. It means the trading ranges are there. It means the opportunities are there. What it also means is that you just can't get into a long trade and think you're going to hold it forever, or a short trade and just going to hold it forever. It means you have to actively manage your trade and work on a risk reduction strategy and allowing yourself to say, hey, if it continues to go, I'm going to continue to hold, and if not, I'm going to tighten my stops and lock in profits and take part of my trade off along the way so I can guarantee some profitability, and that's exactly what we're doing. So look forward to some continued activity here. And if you want to be able to improve your behavior long term, if you want to be able to approach and attack these type situations with greater success, not just now, but long term, then you owe it to yourself to give us a look and come into the trade floor and let me teach you some of my proven and very simplistic strategies approaching the market. Just send me an email, as I suggest every day. I invite you just to drop me a line at derekschimming@gmail.com. That email address is clearly printed on every one of these videos, and we give you the opportunity to come in with us, trade with us, take a training class with me, and the opportunity to stay with us long term. We'd love to have you. I know it would be in your best interest. Again, I hope you find these videos helpful and informative. I want to continue to train and guide and share my knowledge and my abilities with those who seek to improve their knowledge and abilities long term. My name is Derek Schimming. As always, you guys have a great day trading.